Now please see the next topic. Now the next thing is capital fund or general fund. Yesterday we have learned about fund based accounting. One more question we will do today. Two more concepts are remaining in this topic that is coming. Now what is capital fund? See, whenever you start any business activity for profit motive, even then you have to contribute some capital for its functioning. And if you are starting a not for profit organization that is not having any profit earning motive, even then you need some fund, you need some capital for your functioning. Without that, you cannot function. So, in that scenario, from where you will get your capital? So, members will contribute the capital, or sometimes government or some big organization they may give funds or donations for this purpose that will see 7, 8, 10 people may combined, they will contribute the fund according to their financial capacity, and that will become a corpus, and that corpus will become the capital of that not-for-profit organization. So it is made of contributions by different parties as corpus donations for commencement and expansion of the not-for-profit organization. So various donations can be there, various donors can be there, various members can be there who will contribute to the capital fund. So capital fund is nothing. Capital fund is actually capital of that not-for-profit organization. And because this fund can be used for any purpose within the limits of the objectives of the organization, that's why sometimes it is also called general fund. It may increase with further donations or by transfer of surplus from income and expenditure accounts. So how the business capital grow? As and when you will be earning the profits, your capital will increase, and due to losses, your capital will decrease. So same is the case here, that due to your surplus in income and expenditure account, your fund will increase, or sometimes you introduce fresh capital into the business. Similarly, you will be receiving some fresh donations also. So if some fresh donations are there, then also your capital will increase. Capital fund will increase, and due to deficit, your capital fund will decrease. Now, what are the categories of funds? So one is unrestricted fund and one is restricted fund. Yesterday we have learned about fund-based accounting. Like suppose in this question we have discussed about prize fund. So prize fund will be used only and only for the distribution of prizes. That will not be used for any other purpose. So its use is restricted. But capital fund or general fund is having unrestricted use. So what is unrestricted fund? It is also known as general fund or capital fund. Management can use such funds for any purpose of the organization. You may have a lot of purpose. So for that, relating to any activity, you can use this capital fund. Now next is restricted fund. So that I have also given you example that whatever fund you are creating with any specific purpose, any specific name, so that fund will be used only for that activity. Like education fund, sports fund. So education fund will be used for the education of the children, but sports fund will be used for the uh, promoting the sports. Okay, now accounting of asset created out of specific fund. See, yesterday what we have learned, that we are having a fund, we are having some income in that fund, we are having some expenses in that fund, but due to this expenses, no asset is created. So whatever income is coming, that is added in the fund. Whatever expenses are there, that has reduced the fund. This much we have learned yesterday. Now, if we have created a fund for any particular asset, or out of any fund, if we are creating any asset, then in that situation, how we will account for that? What will be the method for fund-based accounting in that scenario? So if an asset is created out of a specific fund, amount incurred on the asset is transferred to capital fund. So uh, you are having a fund, suppose building fund you are having rupees 1 lakh, and you have constructed a building out of that building fund costing rupees 60,000. So that 60,000 will be now your capital, because ultimately that fund has not gone anywhere. You have converted the form of cash which you are having in the form of fund. That form has been converted into now a asset with you only. That is also with you. So it has not gone anywhere outside the business. It looks like that money is going out, but money is actually getting converted into the form of an asset. The liability to use that fund for that specific purpose get finished. So the moment you use that fund for the construction of any asset, your liability will be finished for that much amount that you have to use this fund for the creation of any asset. In practical way, if you see, suppose someone has given you rupees 2 lakh for the construction of any building. So this becomes your liability. That's why you show it as a liability in the balance sheet that we are having a rupees 2 lakh building fund. Now out of that rupees 2 lakh, suppose you have used rupees 80,000 in the construction of building. So your liability gets finished up to rupees 80,000 to use for that specific purpose. You have used it for that specific purpose, and now you are having an asset of rupees 80,000 in your balance sheet. So in a way, that person has given you rupees 2 lakh, but what he has given you? He has given you actually rupees uh, 80,000 building. So from where you are getting, like if any owner is contributing rupees 80,000 building in as capital in his business, so what general entry will be doing? Building account debit to capital account. So that's why if you are creating any asset out of any specific fund in that scene, you have to transfer that amount from the specific fund to the capital fund. How we will be doing that? For that we will see one question. How will be the following items? How will be the following items dealt while preparing balance sheet of Chennai club as at 31st March 2020? So we have to show it in the balance sheet. We are having a building fund. We are having a tournament fund. We are receiving life membership fees, and we are having a capital fund. So first we will write capital fund here. Capital fund. So capital fund balance is 25 lakh. Then we are having a building fund. So we will write here building fund. And building fund is 10 lakh. Then we are having a tournament fund. Tournament fund is 15,000. Okay. So in building fund we are receiving the donation. So we will add it. Add donation received for building, and we have received donation 25 lakh. So now it will become 35 lakh. and we have constructed a building. Expenditure on the building is 22,50,000. So it will be transferred to the capital fund now. Less transfer to capital fund. 22,50,000. So the balance will be now in this fund 35 minus 22, 13, 12,50,000. So the balance will be 12,50,000. And because this has been transferred to capital fund, so here it will be added. Add transfer from building fund and transfer from building fund is 22,50,000. Then okay, so we have completed these two informations. Now coming to tournament fund. Tournament fund is 15,000 that we have already written. Donation received will be added. Add donation received. Donation is received for 25,000. Tournament expenses 42,000. So that will be added first. Proceeds will be added. So first we will add the proceeds. Proceeds from sale of tournament tickets 35,000. We will add it. This will become 75,000 less. Now we will subtract the expenses of tournament. Tournament expenses. Tournament expenses. Tournament expenses are 42,000. So expenses are different from creation of any asset, that you have to understand. Once expenses are there, obviously your fund will get reduced. But if you are creating any asset out of that, you will be having that asset. Your fund will get reduced, but you will be having the asset in exchange. And that's why it will become your capital. This is the difference between these two types of funds. So it will be 73 and 33,000. So now the balance in tournament fund is 33,000. Balance in building fund is 12,50,000. Life membership fees received. So life membership fees will be added here in the capital fund because it is a capital receipt. So it will be added in capital fund. Life membership fees 40,000. That will be added. Now the total of it will be 27, 47, 50, 47, 90. 47,90,000. This will become the total. Now we have created a building out of that, so that building will also come in asset. Building 22,50,000. Yes, please. Any queries there regarding this? Or this is clear? Let me know that.